can see time is around 7:36. Let's look into weekly bank nifty trade analysis. As you can see, there was a good sell-off and a fast recovery as well. So let's look into and dive deeper into bank nifty trade analysis. So what you can see here is that if you look into a 5-minute time frame, guys, what you can see here is that the market in a 5-minute time frame is trading above the 200 moving average, above the 9 moving average, as well as the 21 moving average. And you can see this candle over here which broke the 9 as well as the 21 moving average. And let's try to place that in a box, this single candle, guys. So what you can consider is to be a point of interest, and look into a 1-minute time frame. So what we usually do is to mark the mid of the first candle over here. This is Monday, guys, and what I want to do is to mark the mid of the first candle. So the low of this candle to the high of this candle, and mark the mid of the first candle, as well as mark the 5-minute zone as well, guys. So 1, 2, 3, 4, 5. So this 5 consecutive candles. Let's mark the zone as well. This is the 5-minute zone. So what you can do here is that the market rejected price from these pivot levels. The gray color line zone over here is the pivot line as well as the central pivot range. And you can see the rejection of price from this 200 moving average and showed some kind of bullish momentum, where the market clearly broke yesterday's high as well. You can see a clear break of structure over here, and this consecutive structure over here, you can see a clear break of structure. And after this break of structure, guys, again the market kind rejected price from these higher levels. You can see this kind of rejection candle where the price rejected here this buy side liquidity over here, you can see. But this is a failure swing, guys, where market failed to sweep above this high over here. Instead the market swept below this high. This is a failure swing, and market clearly broke structure towards the downside, and it was not an impulsive break of structure, but which gradually led to a break of structure. So if you look into a 5-minute time frame, you can see the market didn't actually break, guys. But what you need to see here is that the market here aggressively sold, but here the price couldn't cross this 200 moving average. Again rejected price from these levels and showed some kind of bullish momentum. Again the market retraced but failed to cross this 200 moving average, as 200 moving average in a 1-minute, 5-minute as well as 15-minute time frames, guys, shows a very good confluence. And whenever price taking support from 200 moving average, the blue color line over here, price taking support from this 200 moving average, either in a 1-minute, 5-minute, or in a you can see rejection of price from 200 moving average over here in a 5-minute time frame over here. You can see this rejection of price, guys, clearly signifying bearishness. So whenever you find rejection of price from 200 moving average, either in a 1-minute or 5-minute as well as 15-minute time frame, you can clearly consider that to be a very good bullish momentum, or in rejection of price from that momentum to be either bearish as well. So let's try to mark the day VWAP level over here. This is the day VWAP level, and what you can consider here is that you can see this kind of bearish momentum. Again the market retraced, rejected price from these levels, and here the market failed to cross this 200 moving average, and you can see the market made a lower low, lower high, and failed to make a lower low, guys. Instead the market broke the structure towards the upside. And if you look into a 5-minute time frame, as I have mentioned to you, this momentum towards the upside, guys, in a 5-minute time frame, here you can see after this kind of rejection of price from VWAP level, the market here showed some kind of bearish momentum. But this candle over here, guys, breaking the 5-minute zone, the mid of the first candle, the 200 moving, the 21 moving average, the 9 moving average, as well as the day VWAP level, you can see with this huge bullish candle where the market clearly broke structure towards the upside, and that's where you could have entered long position, keeping your stop loss just below that candle itself, guys. And you can see this kind of huge bullish momentum. And what you can see here in a 1-minute time frame as well, you can see there was a series of downward candles where the market failed to cross below this 200 moving average. And you can see this kind of bullish engulfing candle engulfing the previous 2 candles over here, guys. The previous 2 candles, as well as the rejection of price from here, and another bullish candle, guys. You can see a lot of confluence over here why you could have taken long position, and with this huge bullish candle, or you can expect the series of down close candles, guys. If you consider this series of down close candles, you could have marked the mid of the first candle, and this is the mid of the downwards momentum, or you can consider to be the zero point 0.5 levels over here. And what you can consider here is that the series of down close candles where this candle over here broke the 21 and the zero point 0.5 levels of this downward momentum, guys. In case if the market sentiment would have been bearish, guys, the market after this kind of series of down close candles could have retraced to this 9 as well as 21 moving average, rejected price from these levels and continued further selling towards the downside. This is how usually the market behaves in case if the market sentiment would have been bearish. But you can see engulfing pattern, rejection of price from this 200 moving average, the 200 moving average support over here, and you can see this huge bullish candle over here, breaking the 9 as well as the 21 moving average towards the upside, clearly indicating bullishness, and this downward momentum, even this breaking the zero point 0.5 levels towards the upside. And after this break, guys, this is where you could have easily entered long position over here after this break of the structure and keeping a stop loss just below this 200 moving average. This is one confirmation entry where you could have taken. And for target levels, you can see there is no proper retracement. This is the last swing over here. So you can use the projection levels over here to consider whether you could have taken long position or what. So the down momentum to the high of here, guys, and you could consider this projection over here towards the upside. And what you could have targeted is the 2.5 levels or the -2 or -2.5 levels. But I will teach you the projection levels later, guys. Let's not consider it. But for us, the risk reward ratio is very important. So the first target would have been this swing high over here. This is the first target, guys. The buy side liquidity over here is our first target over here. This is one buy side liquidity, and there is a failure swings over here, so there is high chance the market would break these levels. And what you could have done is to trade as long as the market is trading above the 9 as well as the 21 moving average. And you can see the market here broke and rejected price from these levels and again retraced but failed to cross the 21 moving average. Again, the market broke structure towards the upside over here. You can see another clear break of structure over here. This is another clear break of structure. And if you consider this huge upward momentum, guys, what you can see is the common point between this to the common point between this. So let's 0.5 levels. You can see the market taking support from 550 levels over here and continuing further bullish. And you can see another break of structure over here. You can see there is another clear break of structure. And you can see a series of break of structures, guys. So what you could have either done is to mark the retracement level of this momentum, guys. This is the last down momentum before it broke structure towards the upside. So the high of this candle to the low of this candle. This is one way where you could have targeted. You could have targeted the 2.6 level, or you could have targeted the 3.6 level. You can see, guys, exactly the market came all the way to 3.6 levels over here. Whenever there is no break of structure and the retracement levels, guys, you can use the retracement of the fib levels over here, the 3.6 levels. So what I'm telling you is that, guys, here you can see the market here made a failure swing and clearly broke structure towards the upside. And for target levels, guys, you can use this swing only. But in case if the market, guys, shows aggressive momentum towards the downside after some kind of bullish momentum, you can see after this kind of bullish momentum and market clearly breaks this structure low and even low and retraces somewhere like this and again continue towards the downside, guys. You can use fib extension levels from the common point between this to the common point between this to the common point between this. But what happened here is that the market clearly didn't break this structure, guys. Instead, you can see you are using this retracement to find the target levels, and you could have just tried your stop losses here as long as the market is trading above the 9 as well as the 21 moving average, and that's how you could have targeted. But if you look into a 5-minute time frame, you could have entered at this position after this kind of huge bullish candle and keeping your stop loss just below that candle. And what you could have done is to target it all the way to these levels over here. You can see here the market swept this liquidity and showed some kind of aggressive momentum. And after this kind of bearish momentum is where you could have exited your long positions. So that was one trade opportunity where you could have taken this huge upward momentum, guys, where the market taking support from this 200 moving average and showing some kind of bullish momentum and targeting it at all the way to 3.68 level over here. So this is where you could have easily targeted. So after this kind of huge bullish momentum, guys, and if you look into a 5-minute time frame, you can see there is a huge bullish momentum where the market swept this buy side liquidity and showed a break of structure. So what you could have done is that you could have You could have drawn the fib levels over here, the common point, the swing low to swing high. You can see the market retracing to 0.38 levels over here. You can see this is the 0.38 levels, guys, where the market retraced, and here the market swept this liquidity, failed. You can see failed to close above this zone over here, guys. So let's look into a 1 minute time frame over here. If you look into a 1 minute time frame, you can see the market retracing all the way to 0.38 levels over here. This kind of retracement and showing some kind of bullish momentum. After this, guys, in case if the market sentiment would have been bullish, the market would have clearly broke these levels towards the upside. Again, retested these levels and continued further bullish. And this zone over here could have been a break block level. But what happened here is that the market, guys, over here swept this liquidity over here and again retraced to this fair value gaps over here. You can see this fair value gaps getting mitigated over here. The fair value gap here, the market came and mitigated. Once if this fair value gap has been mitigated, it doesn't hold any value. So the market retraced to this fair value gap, and in case if the market sentiment again would have been bullish, guys, the market after rejecting price from this fair value gap could have clearly broken this structure high over here. You can see this structure high. Instead, the market broke structure towards the downside over here. You can see a clear market structure shift over here, guys, where the market aggressively sold towards the downside. And if you consider this swing momentum, where the market changed the overall sentiment from being bullish to bearish, and the market has left here with fair value gaps as well. So what you can consider here is that there is a mitigation block here, guys. I will explain to you what is mitigation block here. So the series of large down close candles over here is the mitigation block over here. So what you can consider this to be a PD array, and this aggressive momentum towards the downside, where the market failed to sweep the liquidity above. Instead, the market broke structure towards the downside. So you can see this huge aggressive momentum towards the downside. So the high to low of this candle over here. So either you could have marked the 50 levels over here. You can consider this to be FPD array. Along with this, this is the 50 levels. This is the 50 level, guys, along with the PD array. And after this kind of retracement, what you could have done is to plot the fib extinction levels over here. So the high of this candle to the low of this candle to all the way to this high of this candle, and targeting it all the way to 1.68 level. So you can see you could have targeted the 100% move, or in case you could have targeted it all the way to 1.68 level as well, guys. So I hope you're understanding what I'm explaining to you. So short position over here, guys. Short position at this, and stop loss above this candle and targeting it all the way to 1.68 level. So, and for better confirmation, you could have used the anchor gap level here above this swing high, and you can see rejection of price, or even this swing high as well. This is where you can see, guys, rejection of price and market failing to close above these levels. And the mitigation block over here, the PDRA can either be a breaker block, the mitigation block, or the any zones, guys. So the series, this large down series of down close candles, and after this, the market showed some kind of bullish momentum but failed to make a higher high. Instead, the market shifted its sentiment from being bullish to bearish, and the market retracing back to the mitigation level over here. And what happens here is, guys, you can see this kind of aggressive selling towards the downside, and a lot of buyers who might have entered here after this aggressive selling, guys. The institutional sellers might have exited their positions after this retracement to this mitigation block, and new sellers might have entered. And you can see after this, the market aggressively sold towards the downside, because a lot of buyers who might have entered here, and after this kind of market structure shift, guys, again the market retracing back to this mitigation block. The buyers who might have entered here might have squared off their positions over here, and they might have opened their fresh positions, taking short positions. And you can see after this, the market rejecting price from this level, showing aggressive selling over here, and you can see the market continued all the way to 1.68 level. So this is as simple as it is, guys. And there is only two trading setups where you could have easily taken, and you could have just scalped over here as well after seeing this rejection of price from 0.38 level, as well as this kind of huge bullish candle over here breaking the 9 as well as the 21 moving average. And you could have kept your stop loss just below this candle and targeting it all the way towards this buy side liquidity. This is one trade opportunity where you could have taken this, and you can see the market is trading above the 200 moving average, above the 9 as well as 21 moving average, as well as above the day pivot levels. So another pro tip is, guys, whenever the market is trading above the 9 moving average, the 21 moving average, above the 200 moving average, above the day VWAP level, guys. You can see here is where the market, guys, at this position over here, where the market here is trading above the 9, the 21, the day VWAP level, the 200 moving average, where price is taking support. Always take long position, guys, and keeping your stop loss just below this 200 moving average or the day VWAP level or the 200 moving average, whichever is near, and you can always win at every possible trades possible, guys. Each and every trade you can win. So this is one trade opportunity where you could have taken it on Monday, guys. So let's consider the Monday's VWAP as it is. Since Monday's VWAP level is a very good confluence for you to take positions as well. And you can see there was some, at the second half of the day, guys, you can see there was some kind of aggressive selling towards the downside. And market on Tuesday, guys, rejecting price from this day VWAP level over here. This is the Monday's VWAP level, guys. And rejection of price from this pivot levels over here, as well as the 200 moving average. If you ask me to zoom in, guys, you can see this is the Monday's VWAP level. So let's mark the Monday's VWAP level in some other color, guys. Since Monday's VWAP level is a very good confluence, so let's try to mark Monday's VWAP level in purple color. So, or let's make it in black only, a bit thicker. So this is the day VWAP level, guys. This is the Tuesday's VWAP level, and you can see the market rejecting price from these VWAP levels, as well as there is some sign of buy side liquidity over here, where the market swept this liquidity, the buy side liquidity over here, or if you consider this kind of huge aggressive selling towards the downside, where again the market took support from the pivot levels over here and showed some kind of momentum towards the upside and mitigating this fair value gaps as well as this buy side liquidity, the market rejecting price from these levels and closing below this Monday VWAP level, guys. And what you can do is to mark the mid of the first candle and as well as the 5-minute zone. So what I usually do is to mark the mid of the first candle, guys. So it's better to mark, if you consider the low to high of this candle, and mark the mid of the first candle, the 0.5 levels over here, as well as the 5-minute zone as well, guys. So let's mark the 5-minute zone as well. So the high to 1, 2, 3, 4, 5 candles over here. This is the 5-minute zone. So let's mark the 5-minute zone as well. So you can see the market shows some kind of aggressive momentum towards the downside after rejecting price from these higher levels, sweeping this buy side liquidity and closing below the Monday's VWAP level, as well as breaking this 200 moving average towards the downside and clearly forming a break of structure over here. You can see aggressive selling, and after that the market taking support from these levels, guys, and showed some kind of bullish momentum, but market failed to cross above this 200 moving average, and you can see this kind of rejection of price from this 200 moving average. And following candle, a huge bearish candle, rejecting price from this day VWAP level, breaking the 21 as well as the 9 moving average. And what I have mentioned to you here is that whenever the market is trading above the 9, the 200 moving average, as well as the 9, as well as the 21 moving average above the day VWAP level, always consider bullish, guys. And the same what happened here is that you can see this kind of huge bearish candle with the market rejecting price from this 200 moving average, but here the market taking support from this 200 moving average, breaking the VWAP level, the 9 as well as the 21 moving average, breaking the 9 VWAP as well as the 21 moving average towards the upside, and this is towards the downside. So you can see a clear contrast in this kind of momentum over here to this momentum over here. So what you could have done is to take a short position over here, guys, after this kind of rejection of price from this 200 moving average, or for better confirmation we could have taken after this kind of huge bearish candle, this candle over here, guys, and keeping your stop loss just above this candle and targeting it all the way towards the downside. And for target levels, what you could have done is to mark the fib extinction levels after this kind of momentum towards the downside. So if you consider the fib extinction levels, guys, the high of this candle to the low of this candle to all the way to high of this candle. So what you could have done is to target the 1.68 level over here. You can see a clear target, guys, the 1.68 level, clear target towards the downside. This is one trade opportunity where you could have taken, and you can see after this the market kind of consolidated and swept this buy side liquidity over here. This is a clear buy side liquidity, and if you consider this aggressive momentum towards the downside and mark the high of this candle, let's mark the high to low of this candle, guys, since the lower wick is blue candle and the higher wick also is blue candle. So let's try to mark the high to low of this candle, and you can see the market coming all the way to this 50 levels. You can see this kind of retracement all the way to this 50 level over here. The market coming all the way to 50 levels, rejecting price on this 200 moving average as well as the day VWAP level. You can see this 250 levels over here and sweeping the buy side liquidity as well, and rejecting price from these levels and continue further selling towards the downside. So what you could have done is to take another short entry over here, keeping your stop losses towards the downside. Or what you could have done is to have another conformational bias, guys, after this kind of rejection of price on this 200 moving average, and you can see a clear break of structure over here, or you can consider the chop formation. After this chop formation, guys, and you can see again the market retracing back towards the upper levels over here. So if you consider the high to low of this candle, the market came all the way to 0.38 level over here. This is the 0.38 level where the market retraced all the way to this levels over here. And in case if you try to plot the fib extinction levels over here, the high to the common point between this to all the way to this levels over here. So you could have targeted the 100% move, or what you could have done is to target it all the way to 2.68 level, or what you can see here is the midway between the 2.6 as well as the 3.6 level over here. I hope you can see here, guys. Sometimes the market retraces all the way to 1.6 and 2.6 midway between this, and sometimes there is a probability for you that the market would come all the way to 2.6 as well as 3.6, the 0.5 levels over here. So for me, what I'm teaching you is, guys, the best entry positions, and that is what I always intended to teach you. And what you can see here is that in case if you try to plot the anchor gap level above this swing high, you can see the rejection of price from these levels and the market continuing further selling towards the downside. So what you could have done is that this series of last upward movement candles, guys, once if this 0.5 levels has been broken towards the downside, this is where exactly you could have taken short position, keeping your stop loss just above that candle itself. So short position over here, keeping your stop loss just above this candle over here and targeting it all the way towards the downside, the 0.5 levels over here. Or in case you could have targeted this sell side liquidity over here. So this is the first target, guys. Usually the sell side liquidity is where you could have targeted over here. The let's sell side liquidity. This is the first target, and you can see after this kind of aggressive momentum, the market again retraced back towards the upside. And if you consider this common point between this to the common point between these, guys, or you can consider this swing low over here, since the swings are of same color, you can see again the market coming all the way to this 50 levels over here, as well as the 0.70 and 0.78 levels over here, rejecting price from these levels and continuing further selling towards the downside. So what you could have done is the market retracing back to this 50 levels. This is the 50 level, guys, where price is retracing here. And in case if you try to plot the fib extinction levels over here of this swing momentum, the common point between this to the common point between this to the common point between this. So what you could have done is to mark it. You can see this 1.6 as well as the 2.6 level over here, which I have already mentioned to you. Sometimes you can even target the mid of this candles also. So somewhere along these levels is where you could have targeted this. It has not yet reached, but for me, what I'm teaching you is the best entry criteria, guys, and exit criteria is based upon your risk. You can trial your stop losses or you can extend it all the way towards the downside. It's based upon you only, guys. So short position over here, keeping your stop loss just above this 200 moving average over here. And for better entry, what you could have done is you can see this kind of upward momentum candles, guys, over here. So there is no fair value gap, no imbalance as well. You can see there is some sort of mitigation. So if you consider this downward momentum, this upward momentum, the 0.5 levels of this is being broken towards the downside. That's where you could have entered short position, keeping your stop loss just above that candle and targeting it all the way towards the downside. So this was one opportunity where you could have taken short position, guys. So 3 trades where you could have taken short entry, keeping your stop loss just above that candle. So this was one trade opportunity where you could have taken on Tuesday as well. So let's take this Tuesday's VWAP level as well. So whenever you find narrow pivot ranges, guys, always expect it's going to be a trend day. But here there was a narrow pivot range, but the market sentiment showed some kind of bullish momentum, but the overall sentiment was bearish. So you can see in case of the market sentiment would have been bullish, guys, again the market would have continued, but not this kind of market structure shift. At this point is where you could have taken short position and even hold it on to your trade for another 3 to 4 days, and you could have easily targeted it all the way to this lower levels as well, guys. So I will teach you to hold your winning trades for a longer period of time as well. Whenever you find the first market structure shift where the market sweeping the buy side liquidities of the previous week, guys, whenever the market sweeps the buy side liquidity of previous weeks and shows some kind of market structure shift, that's when you can hold your trades for another 2 3 days, expecting the market to continue further selling towards the downside. So this is about Monday, as well as this is about the Tuesday, guys. 3 trade opportunities where you could have taken positions over here. So now let's look into Tuesday trade analysis, Wednesday trade analysis. So what we do on Wednesday is to mark the mid of the first candle, guys. Since it is a wide pivot range, always take a smaller risk, guys. So you can expect the market to be a sideways during a wide pivot range, and mark the 5 minute zone as well. The 1, 2, 3, 4, 5 minute zone as well. So this is a bearish momentum over here. So if you try to mark the 5 minute zone over here, this is the 5 minute zone, guys. So let's try to mark this 5 minute zone over here. This is and you can see what happened here is that the market, there was a huge selling pressure over here. You can see there was an aggressive selling, and what you can see here is that there is an order block level here, guys. You can see this kind of huge aggressive selling over here. You can consider the last up candle before it broke structure towards the downside. This is a clear 1 minute order block, or if you consider it in a 5 minute, guys, 5 minute time frame, let's refine. So you can see this is the last up candle before it broke structure towards the downside. So the market retracing all the way to this 5 minute order block as well, since it has not yet been mitigated. So what you can consider is that here, guys, there is no clear support over here, guys. If you even look over here, you can see the market here consolidated here and broke structure towards the upside. Here, neither the market swept this liquidity nor the market showed any kind of bullish sentiment, guys. But what we need to see here is that the market here, guys, rejected price from these levels. You can see this clear buy side liquidity sweep. The market swept and rejected price from these levels. So what happened here is that the market showed some kind of bearish momentum, but the market here failed to close below the 9 as well as the 21 moving average. Again, showed some kind of bullish momentum, and market continuing towards the downside. But here, what happened here is that there are two things what happened here, guys. The market taking support from yesterday's close level. This is the yesterday's close level, as well as the market failed to break structure below these levels, guys. Here the market just swept this liquidity, sell side liquidity, but market failed to break structure towards the downside. In case if the market sentiment would have been bearish, guys, the market after this kind of huge bullish momentum, rejecting price from this 5 minute zone, again could have clearly broke structure towards the downside and continued further like this, guys. So this is usually how the market behaves in case if the market sentiment would have been bearish. But what happened here is that the market taking support from yesterday's close level over here. So this is the yesterday's close level, guys. The market taking support from yesterday's close level, as well as the market swept this liquidity and showed some kind of bullish momentum. And what you could have done is that after this kind of huge upward momentum where the market even broke this structure high also, the high of this candle to all the way to the low of this candle, once if this 0.5 levels has been broken towards the upside, you can see the 0.5 levels has been broken towards the upside is where you could have entered long position, keeping your stop loss just below that candle. It's the long position over here, keeping your stop loss just below this candle over here, the sell side liquidity over here, and targeting it all the way towards the upside. And for target levels, you can use this last downward momentum candle over here. So the high of this candle to all the way to low of this candle, and targeting it all the way to 2.68 level, the 1.68 level, or you can consider the order block level over here. So you could have targeted it all the way to this 3.6 levels over here. So this is how you could have targeted, guys. So I hope you're understanding what I'm saying. This is how you could have targeted in case if the market sentiment would have been bearish, guys. What usually happens is that the market, after rejecting price from these levels over here, the market initially could have broke this structure towards the downside. Again, the market shows some kind of hesitation towards the upside and continued further selling like this. This is how usually the market behaves. But you can see the market sweeping the sell side liquidity, taking this support from yesterday's close level, and you can see this kind of huge bullish candle over here, guys. This candle over here And let's try to mark the daily gap level as well. And you can see this is the daily gap level, and this one single candle, guys, changed the entire sentiment from market from being bearish to bullish. The market breaking the sweeping this liquidity below, breaking the 21 moving average, the 9 moving average, the 21 moving average, as well as the daily gap level. This is as same as this momentum over here, guys, and this is as same as here. You can see a single candles, but this was in a 5 minute time frame, but this is in a 1 minute time frame itself. A single candle breaking the all the moving averages towards the upside and closing above that levels. And you can see after this break, the market is consolidating and continuing further bullish. So easily you could have taken this trade, guys. And you can see there is a fair value gap over here, fair value gap over here. So you could have targeted it all the way towards the upside, the 1 minute order block levels over here. So what you could have done is to target it all the way towards these levels over here, guys. So this is what usually you could have taken trade over here. So another, and here you can see after this kind of momentum over here, price reaching the major supply zone over here, one thing happened is that you can see some sort of rounding top bottom pattern over here, as well as if you look into a clear price action over here, is the market after this kind of huge bullish momentum over here, you can see a clear break of structure over here. This is a clear break of structure. So after this, the market shows some kind of bullish momentum. The common point between this to the common point between this, the market retracing to this 550 levels over here. You can see this is the 550 level where price retracing. So let's mark the 550 level. After this, the market showed some kind of bullish momentum, but market failed to make an higher high. Instead, the market just swept this liquidity over here. You can see this is just a sweep, guys, or you can consider sweeping the buy side liquidity over here. The market swept this buy side liquidity, failed to close above these levels. Instead, the market clearly broke structure towards the downside. You can see a clear break of structure, or you can consider the market structure shift over here. And this is the last up candle before it broke structure towards the downside. So this is one failure swing, and this is a failure, another failure swing, and you can consider this momentum towards the upside, downside, and you can clearly mark the order block level over here. This is the clear 1 minute order block. This is one confluence, and you can mark the mitigation block as well. This is another mitigation block over here, or you can consider the PDRA. And if you consider this bearish momentum, the common point between this to the common point between this, the optimum trade entry zone over here. So what you, and in case if you try to plot the anchor gap level here, you can see the price rejection of price. So what you could have taken is to clear enter short position over here, keeping your stop loss just above the swing high, guys. And for target levels, what you could have used is fib extension levels over here, the common point between this to the common point between this to the common point between this. So what you could have targeted is all the way to this 4.26 level over this buy side liquidity, the sell side liquidity over here. Here there is a sell side liquidity over here. So along with the 4.26 level as well. So this is exactly where you could have targeted, guys. I hope you're understanding what I'm saying. This is how you could have clearly taken short position over here and targeting it all the way towards the downside. So this was one crazy trade opportunity where you could have taken towards the downside, where the market reaching the major supply zone over here, the market structure shift. Again, the market retracing towards the upside, reaching the mitigation block, the order block level, or for another confirmation also, you could have marked this retracement levels. And once if this 0.5 levels has been broken towards the downside, you can see this 0.5 levels has been broken towards the downside, and this was another entry model where you could have taken, keeping your stop loss just above that swing high itself and targeting it all the way towards the downside. This was another trade opportunity where you could have taken, guys. I hope you're understanding. And targeting it all the way towards the downside, and you can see this kind of rejection of price from these lower levels. Since there is an order block level here, you can see this is the last down move before it broke structure towards the upside. You can see a clear market structure shift over here, showing a huge bullish momentum, guys. And if you consider the order block level, you can consider this order block level, guys. So if you consider this last down candle before it broke structure, so if you consider this order block level, and that's where the market came and reach the order block, guys. Exactly at that point is where, so in case if you might have known the order block level, you could have even targeted all the way towards this level. So what I just marked is the last down candle before it broke structure towards the upside, and the last down candle, the downward momentum is this candle over here, guys. So that's exactly where the market came and mitigated this levels over here. So I hope you're understanding, guys, what I'm saying. So what you can see is that after this kind of huge bearish momentum, guys, always look for downward setups only rather than bullish setups. You can see the last up move before it broke structure towards the downside. You can see the market reaching this optimum trade entry zone, or you can consider this to be a mitigation block level as well. The market reached this mitigation block over here. This series of up close candles. This is the mitigation block as well as the optimum trade entry zone over here. This is the optimum trade entry zone. This is the PD array. So what you can see is that the market failed to cross above these levels, guys. You can see after this also the market came all the way to these levels. So what you can see here is that the market showed some kind of bullish momentum over here. Again, it retraced. So if you consider this series of down candles over here, once if this 0.5 levels has been broken towards the upside, guys, the 0.5 levels has been broken towards the upside is where you could have taken a long position over here, keeping your stop loss just below this candle and targeting it all the way towards the upside. The major pivot levels, the PDRA, the optimum trade entry zone, somewhere along these levels also you could have easily scalped over here. But there are multiple scalping opportunities where we could have even taken position over here and even targeting towards the downside, guys. But scalping is I don't teach scalping over here, guys. What I want to teach is that based upon risk to reward ratio, definitely you can even scalp here, 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 anywhere along these levels. Also, you could have just scalp 50 to 60 points, guys. You can see this kind of consolidation. The price is consolidating below the 9 as well as the 20 moving average. Here also, you could have easily taken short position over here and you could have targeted this move towards the downside. Here, after this kind of support over here, guys, you can see the market showed some kind of bullish momentum but failed to make an higher high, and we could have marked the 0.5 levels of this kind of retracement, and once if the 0.5 levels has been broken towards the downside, you could have kept your stop loss just above that candle and targeting it all the way towards the downside as well. So that was another trade opportunity where you could have taken. But one, you can see this good opportunity, another good opportunity, enough, guys. For you don't have to take 5 to 6 trades in a day, guys. All you have to do is to take either 1 or 2 trades in a day, and that's more than enough, guys. And usually for beginners, guys, what I want to teach and tell you is that don't take more than 3 to 4 trades in a day, guys. And if you are taking more than 3 to 4 trades a day, definitely you're gambling and you're not even learning anything, guys. Definitely you're not going to be a profitable trader in a long term. And the best traders are those traders who either take 1 or 2 traders, guys. And those are the only profitable traders I have heard so far. If you're taking 5 to 10 trades, or there are traders who takes more than 100 trades also, guys, definitely I'm not recommending you to take such kind of trades, guys. So always focus on taking 1 or 2 trades a day and with a minimum risk to reward ratio. And either you learn to accept your stop losses once your stop loss has been hit, or learn to trial your stop losses and manage the risk as well, guys. So that is usually what I always ask for. So let's try to take this VWAP levels out. And on Thursday, guys, you can see Thursday is an expiry day, so you can expect this kind of manipulation. And you can see throughout the day there was some kind of downward momentum, and during the second half of the day after 2:30, you can see this kind of bullish momentum. Whenever you find some kind of bullish momentum where the market throughout the day showed some kind of bearish momentum, guys, you always take the positions and you could have easily made some profit over here as well. So this hero zero trade opportunities always comes after 2:30, guys. So always keep in mind, in case if there is no call opportunity for you to take throughout the day. So you can see throughout the day there was no call opportunity trade where you could have taken long positions. You could have either sold and you could have made a profit, but definitely not on call side. Even if the market showed some kind of momentum towards the upside, you can see this kind of momentum. There was no balanced move. There was a very balanced move with no fair value gaps or imbalance as well. So let's try to decode, guys, the trade, what happened on Thursday, and let's try to analyze it as well. So what happened here is that what we usually do is to mark the mid of the first candle over here. So the last down candle to the upward momentum over here is to mark the mid of the first candle, guys. This is the mid of the first candle over here, and as well as the 5 minute zone as well. So if you consider the 1, 2, 3, 4, 5 candles over here, this is the 5 minute zone as well. You can see this is the 5 minute zone. So what you can see here is that even mark the VWAP level over here. This is the day VWAP level, guys. So what happened? You can see here is that even in a 1 minute time frame over here, guys, the market is trading below the 200 moving average. So let's look into a 5 minute time frame. What happened on Thursday? You can see in a 5 minute also the market is trading below the 200 moving average, clearly signifying bearishness. And you can see here the market after this kind of huge bearish momentum, the market breaking this 200 moving average towards the downside, again retracing back to this levels over here where I have marked your levels over here, guys. So rejecting price from these levels and continuing further selling towards the downside. Again, retrace back to this order block levels and continue further selling. So let's not dive deeper into what happened on that. But here, what happened on Thursday is that the market is trading below the 200 moving average over here in either in a 1 minute as well as a 5 minute time frame where the market is trading, and you should look for whether the market taking support from 15 minutes moving average also, guys. So better always confirm with 15 minutes moving average, because 15-minute moving average also is a better confluence, since you can see support over here, the momentum towards the upside, support over here, momentum towards the upside. You can see the market here hugely gapped up and the market consolidated, traded above this 15-minute average moving average, and you can see this kind of huge upward momentum, right? So 15-minute moving average also is very important. So what happened on expiry day is that usually on expiry days, guys, you can see some kind of manipulation. Either you can expect a huge upward momentums like this, huge rallies, but what happened here is that even though the market showed a narrow pivot range, you can see the market was very showing a very balanced move with no fair value gaps as well as imbalance. And in my previous videos, I have already mentioned here, guys, whenever you find this kind of sloping pattern, guys, always that signifies that the market is bearish, guys. But sloping towards the upside definitely not considered to be bullish, guys, but the rounding bottom is definitely considered to be bullish, but not rounding sloping towards the upside. Definitely this kind of rounding bottom, guys, definitely it's considered to be a bullish momentum. So what you can see here is that since there is no clear price action over here and the market is trading below the 200 moving average, and only after this momentum, guys, you can see the market was consolidating, and this VWAP also is trading in horizontal way. Only this momentum over here, guys, showed some kind of bearish sentiment, where this swing over here clearly broken this low, this low, this low towards the downside. You can see even this low towards the downside, clear break of structure, or you can consider the initial shock formation over here after this kind of huge bearish momentum. And if you consider the common point between this to the common point between this, the market retracing all the way to this 550 levels over here. This is the 550 level where the market retraced over here. So in case if you try to plot the fib extinction levels here, the common point between this to the common point between this to the common point between this, so you could have targeted it all the way to 1.68 level over here. This is the 1.68 level where you could have targeted short position over here, guys, keeping your stop loss just above this candle over here. Or what you can see is that either you could have expected the market to take support and continue further bullish. So what you could have done is to mark the retracement levels fib, guys, the common point in this to the common point in this. So what you could have done is to mark the 0.5 levels over here. Once if this 0.5 levels has been broken towards the downside, that's where you could have taken short position, keeping your stop losses just above this candle itself and targeting it all the way towards the downside. So this was one opportunity. You can see 0.5 levels of this momentum after this kind of candle, where you can see this kind of aggressive. Again, the market retraced to 0.5 levels is where you could have taken short position. And for better confirmation, you could have used your anchor VWAP levels over here. You can see the market retracing all the way to this 0.5 levels, and this point is exactly at around 11 or 16 is where you could have taken and targeting it all the way towards the downside, guys. So this was one trade opportunity, and you can see the market consolidated throughout the day, guys, from all the way from 11:30 to 2:30 as well. But as soon as after 2:30, guys, what happened is that the market swept the previous candles low over here. It's the clear sweep of liquidity over here, or you can consider sell side liquidity sweep. You can see this candle over here. The previous 1, 2, 3, 4, 5, 6, 7, many previous 5 to 6 candles lows here swept and showed some kind of bullish momentum, and the market clearly broke structure towards the upside. You can see a clear market structure shift over here, where the market broke structure towards the upside. Either you could have taken long position over here, but in case if you might have missed out on this move, guys, always wait for retracement. And what happened here is that you can see on this retracement, guys, this is the anchor VWAP level. So let's try to take this out. You can see if you consider this huge upward momentum, the last down candle to the last upward candle over here. So what you can mark is the 50 levels over here. This is the 50 level, guys, where the market retracing back to 50 levels over here. So the market here failed to cross below this 20 moving average. Usually, whenever the market is trading bearish throughout the day, guys, on expiry day, and suddenly the market shows some kind of market bullish momentum as well as market structure shift, always consider to take long position. Don't try to take this is just a manipulation so that you could have either you expect the market to continue. This will never happen, guys. Expansion, consolidation, and further expansion is what usually happens. So after this momentum, guys, you can see this 200 moving average support here, as well as a 20 moving average support over here, and market rejecting price from this 9 moving average, clearly signifying bullishness. So what you could have done is to plot the Fib extinction levels, the common point between this to the common point between this to this common point, and you could have targeted it all the way to 1.68 level over here, or you can see 100% move is more than enough, guys. You could have easily doubled your capital when after taking this position over here, keeping your stop loss just below this candle over here and targeting it all the way towards the upside. So if you might have taken this position in Nifty 50, you could have easily doubled your profit, guys. So this was one trade opportunity where you could have taken. But whenever you consider this momentum, either after this kind of momentum itself, whenever you are very much experienced and knows how the market behaves, you could have either taken your position, exited here, and again you could have re-entered your position. But let's not take things too complicated, guys. 2 trades, I think it's more than enough, sufficient for a day, and I think that would be more than enough, guys. So let's take this mid of the first candles out, guys. And what happened on Friday, you can see after this kind of huge market structure shift, this is the first market structure shift happened, and you can see another huge market structure shift where the market shows some kind of huge aggressive momentum, and always trade along with that market structure shift, guys. Don't go against that levels. And you can see here what happened on Friday, guys, is to mark the mid of the first candle, the down to up candle over here. Let's mark the mid of the first candle. This is the mid of the first candle as well as the 5-minute zone as well. So if you consider the high to low here, so this is the high of this candle to the low of this candle. So let's mark the 5-minute zone as well. This is the 5-minute zone, guys. So what happened as well as the day VWAP level. Let's take this anchor VWAP level out. So here you can see the market over here, guys, came all the way, rejected price from these levels over here. You can see huge bearish momentum towards the downside, where the market clearly broke structure towards the downside. You can see a clear break of structure. After this kind of break of structure, guys, after the market rejecting price from higher levels and showed a break of structure, what you could have either expected is that the market retracing all the way to VWAP levels over here, or as the 9 as well as the 21 moving average, rejecting price from these levels and continuing further bearish. But what happened is that instead the market broke structure towards, showed some kind of bullish momentum, and even broke the 9 as well as the 21 moving average as well as the 200 the day VWAP level towards the upside, clearly indicating some sort of bullishness. And that is because this 200 moving average support over here, guys, as well as the pivot level support over here. This is the day's pivot level as well as the 200 moving average. Whenever the 200 moving average is below, guys, and the price is trading above the 200 moving average, always look for long positions. So you can see short positions over here, and since the market is overextended, you could have taken long position. But definitely after this market structure shift, the market is trading above the 200 moving average. That's where you could have taken long position over here. So here also, guys, the 200 moving average being broken towards the upside. But what happened here is that since the market reached the major supply zone over here, that's where you could have taken short position. But either you could have even taken short position after this kind of rejection of price from this 200 moving average as well. Instead, if you might have failed to take your position over here. But let's consider here, guys, what happened here is that you can see the market, in case if the market sentiment would have been bearish, the market after this break of structure would have retraced all the way to these VWAP levels, the 9 as well as the 20 moving average, rejecting price from these levels and continue further selling towards the downside. But instead, the market broke towards the upside, breaking the 5-minute zone in the middle of the first candle, the day VWAP level, the 9 as well as the 21 moving average. And again, the market retraced, guys. But what happened here is that you can see this candle over here, guys. This single candle, whenever a single candle breaking the moving averages towards the upside, you can see, if you consider this candle over here, guys, this single candle which broke the 921 as well as the day VWAP level as well as the 200 moving average over here. And if you consider the same candle over here, this single candle over here breaking the day VWAP level, day 9 as well as the 21 moving average, clearly signifying bullishness, guys. So either you could have taken long position after this candle breaking the structure above, keeping your stop loss just below these levels, and for target levels you could have used this Fib extension levels over here, the high to low of this candle, and targeting all the way to this 2.6 level over here. So if you consider the retracement levels over here, guys, the retracement over here, so you can see you could have easily targeted these 2.6 levels over here, and this is where you could have targeted the 2.6 level over here. So this was one opportunity where you could have taken a long position. And what happened here is that the market failed to sweep this liquidity above, and this is a clear failure swing, guys. You can see, even though the market showed some kind of sideways manner and even broke this order block levels over here, you can see this is a large down candle before it broke structure. Again, the market came towards the downside since there is a fair value gap over here. You can see mitigated this fair value gap. So as well as if you consider this huge upward momentum, the common point between this to the common point between this, the market reaching the optimum trade entry zone over here. You can see a better confluence over here, the optimum trade entry zone where the price is reaching it all the way. The optimum trade entry zone, the mid of the first candle support over here, the fair value gap over here, the order block level being broken towards the downside since there is a fair value gap over here. And after this kind of bullish candle, guys, you could have taken another long position since there is a strong support over here, and keeping your stop loss just below this candle and targeting it all the way towards the upside. And for this, you could have used the Fib extension levels over here, the common point, the swing low over here, the common point between this to the common point between this to the common point between this. So what you could have targeted is all the way to 1.68 level. So this is exactly where you could have targeted it, guys. So all the way to this levels over here is where you could have targeted. So another good trade opportunity where you could have taken towards the long side. And if you consider the last down to the last up candle over here, you can see again the market reaching all the way to this 550 levels over here, showing some sort of support over here. This is the 550 level, and there is no major supply zone over here, guys. So consider the market. The market just struck this liquidity above since there is a fair value gap over here and rejecting price and continuing further towards the downside. And once if this 0.5 levels has been broken towards the upside, if you consider this huge downward momentum, and you can see it has been clearly broken towards the downside. And if you mark this 0.5 levels over here, this is where you could have clearly taken long position and targeting it all the way to this liquidity levels over here. So this is one buy side liquidity. Taking another long position over here, keeping long position over here, keeping your stop loss just below this 200 moving average and targeting this towards the upside. So this is one opportunity, but let's not consider this, guys. That is only for scalping, I guess. So you can see how the market trading in the upper limits throughout the day. So this was one beautiful trade opportunity where you could have taken the market trading above the pivot levels, above the 200 moving average, above the day VWAP level over here, above the 9 as well as the 21 moving average. You can see here everything is in confluence, taking long position, and you could have easily targeted towards the upside, guys. So I hope you're understanding what I'm saying. In case if you find my videos helpful, guys, please like, share, and comment, and share with your friends and family as well. I haven't explained you in detail of each and every momentum which I usually explain, guys, but definitely there is no point in me explaining each and every. What you want to do is to take either one or two trades in a day, guys. So I'm more focused on taking either one or two trades, and that's more than enough, guys. Either you accept this stop loss or there is no revenge trading over here. After you taking stop losses, you can take another trade, and in case if that also hits your stop loss, just close your trades, guys, and don't take any trades after that. And there is always a better day, and that day is tomorrow. And always wait for tomorrow, guys. Don't be in ego that you should recover your losses in a single day itself. Always trade based upon risk to reward ratio, and trial your stop losses once if your trade is moving in your direction, guys, and learn to accept stop losses, guys. The fundamental and the most important thing I want traders to learn is to learn to accept stop losses and trade based upon risk to reward ratio, and for even for your risk levels, guys. I have already showed you why I keep my risk in this limited. You can even extend its levels towards the upside, but if you see my videos, how I position size my risk based upon reward ratio, that's how I always recommend anyone to trade based upon risk to reward ratio. And once you learn to accept the stop loss, only then you can become a profitable trader, guys. So all my losses which have that is when I fail to accept losses, guys, and have that ego in myself that I should there is no way that the trade will go against my direction, and that ego will destroy, guys. Learn to accept stop losses and keep your trades as simple as it is, and don't overcomplicate with so much of trade analysis. And what I'm teaching is more than sufficient, guys, for you to take trades and be consistent, guys, and be disciplined. Only then you can be a profitable trader. So this is what I wanted to tell you, guys. In case if you find my videos helpful, please like, share, and comment, share with your friends. In case if you want to keep in touch with me, Instagram is a way to go, guys. You can message me over there. So that's it, guys. Thank you.